Greetings everyone, welcome to HouseLux Estate, your go-to channel for everything related to homes, finance, and real estate. We're here to guide you through the winding paths of homeownership and financial planning. Whether you're a new homeowner or a seasoned investor, our mission is to simplify your journey, offering expert advice and insights. So, buckle up as we navigate the complexities of your financial voyage together. In today's video, we will delve deep into efficient tax planning and savings. Before we jump into the best practices, it's essential to understand what tax planning is. At its core, tax planning is the analysis of one's financial situation from a tax perspective. The goal? To ensure tax efficiency. Through the effective use of tax laws, regulations, and benefits, tax planning can help reduce the amount of tax you owe each year. It's a strategic approach that allows you to make the best use of tax exemptions, deductions, allowances, and rebates provided by the law. Here's where it gets interesting, especially for homeowners. Did you know that owning a home can offer a multitude of tax benefits? For instance, the interest you pay on your mortgage could be tax deductible. Additionally, property taxes and certain home improvements may also provide tax benefits. Remember, tax planning isn't just about reducing your tax liability for this year. It's about planning for the future, too. It's about understanding how major life events like buying a home, having a child, or retiring can affect your taxes. With careful and strategic tax planning, you can have more of your hard-earned money to save, invest, or spend as you see fit. It's about putting you in control of your financial future. Now that we have a clear understanding of tax planning, let's move on to the best practices. The first best practice we have for you is keeping good records. Now, this may sound like a no-brainer, but you'd be surprised how often this simple step is overlooked. Good record keeping is the backbone of effective tax planning and savings. Why is this so important, you ask? Well, having a well-organized system of financial documents, receipts, and expenses allows for more accurate tax filing. It's like having a detailed map to navigate the often complex terrain of taxes. When you keep good records, you have a clear picture of your financial landscape, making it easier to pinpoint areas of potential tax savings and prevent costly mistakes. Think about it. With every receipt, invoice, or expense record you keep, you're essentially building a comprehensive financial profile. This profile can serve as a powerful tool during tax season, helping you to identify eligible deductions or credits. It's also a useful reference in case of an audit, providing solid evidence of your expenses and income. Moreover, maintaining good records can reduce stress. There's nothing quite as nerve-wracking as scrambling to find a crucial receipt or document at the last minute. With a good record-keeping system in place, tax time becomes less of a frantic scramble and more of a smooth, straightforward process. In conclusion, good record-keeping is more than just a best practice. It's a strategy for efficient tax planning and savings. So do yourself a favor and start organizing your financial documents today. Remember, an organized taxpayer is a smart taxpayer. Next up in our list of best practices is making the most of tax credits and deductions. So, what exactly are tax credits and deductions? Well, they are a kind of gift from the government to reduce the amount of tax you owe. Tax credits are subtracted directly from the amount of tax you owe, reducing it dollar for dollar. Deductions, on the other hand, lower your taxable income, which can bump you down to a lower tax bracket. There are a plethora of tax credits and deductions out there, each with its own set of rules and eligibility requirements. For homeowners, some of the most common include the mortgage interest deduction, property tax deduction, and home office deduction. Let's break these down. The mortgage interest deduction allows homeowners to deduct interest paid on up to $1 million of mortgage debt. This can be a significant savings, especially in the early years of homeownership when interest payments are highest. The property tax deduction is another big one. It allows you to deduct the amount you pay in property taxes. However, it's important to note that this deduction is limited to $10,000 per year, or $5,000 if you're married and filing separately. The home office deduction is for those who use part of their home exclusively for business. It allows you to deduct a portion of your home's expenses, like utilities, insurance, and repairs, based on the percentage of your home used for business. These are just a few examples. There are many more credits and deductions available, and they can add up to substantial savings. It's crucial to stay informed about these opportunities and to take advantage of them whenever possible. Remember, every dollar saved is a dollar earned. And while tax planning may seem complex and intimidating, It's a necessary part of financial management. With some knowledge and a little effort, you can use tax credits and deductions to your advantage and save a significant amount of money. Never underestimate the power of tax credits and deductions. They can significantly reduce your tax liability. Our third best practice is considering professional help. Now, let's face it, tax planning is not everyone's cup of tea. It's complex, time-consuming, and for some, downright intimidating. But here's the good news. You don't have to go at it alone. There are professionals out there who specialize in navigating the labyrinth of tax laws and regulations, and they can be a game changer when it comes to efficient tax planning. One of the primary benefits of hiring a tax professional is their expertise. These individuals are trained to understand the intricacies of tax laws, and they stay updated on any changes that might affect your financial situation. They can help you strategize, plan, and implement tax-saving measures that you might not have been aware of on your own. It's also worth noting that tax professionals can save you a great deal of time. Instead of spending countless hours trying to make sense of complicated tax forms, you can delegate this task to a pro. This not only frees up your time for other important things, but also ensures that your taxes are done correctly. And then there's the peace of mind that comes with knowing that a professional has your back. If you've ever worried about making a costly mistake on your tax return or being audited by the IRS, a tax professional can provide reassurance. They can help you avoid common pitfalls and can represent you in case of any disputes with the tax authorities. In addition to tax professionals, there's also tax software available that can make the process of tax planning much simpler. These programs are designed to guide you step by step through your tax return, ensuring accuracy and maximizing deductions and credits. While it may seem like an extra expense, professional help can save you from costly mistakes and even save you money in the long run. So, if you find yourself overwhelmed by tax planning, or if you simply want to make sure you're taking full advantage of tax-saving opportunities, it might be time to consider professional help. Let's quickly recap what we've learned today. We began by understanding the importance of tax planning. It's not just about paying your dues to Uncle Sam, it's about taking control of your financial health. Remember, tax planning is a year-round activity that requires consistent effort and attention. With a proactive approach, you can take advantage of tax laws and regulations to minimize your tax liability and maximize your savings. We then moved on to the significance of keeping good records. It's not the most thrilling task, but it's a critical one. Organizing your receipts, documenting your expenses, and tracking your income can help you avoid any unpleasant surprises at tax time. Besides, good record-keeping practices can save you time and stress if you're ever audited by the IRS. Next, we talked about tax credits and deductions. These are like the secret weapons in your tax-saving arsenal. From education credits and charitable donations to mortgage interest and energy-efficient upgrades, there are numerous opportunities to reduce your taxable income. The key is to stay informed and make strategic decisions throughout the year. We also considered the benefits of professional help. While it may seem like an extra expense, hiring a tax professional can, in fact, save you money in the long run. They can guide you through complex tax laws, help you avoid costly mistakes, and ensure you're making the most of every tax-saving opportunity. Finally, we emphasize the importance of efficient tax planning and savings. Whether you're a homeowner or a renter, single or married, young or old, effective tax planning can make a significant difference to your financial well-being. It's not about evading taxes. It's about understanding the system and using it to your advantage. So there you have it. Tax planning might seem daunting, but with the right knowledge and tools, it doesn't have to be. And remember, the path to financial freedom starts with small, consistent steps. Thank you for joining us today on Homeowners Estate. Don't forget to subscribe for more helpful tips on home finance and real estate. Until next time, happy tax planning.